Should you buy a house right now, or could you get stung by a potential market crash and lose a large chunk of money? Well, today I'm going to be explaining the advantages and disadvantages of buying a house right now in this current economic climate, and also figuring out the monetary risk versus reward. But before we get started, only about 2.5% of you are actually subscribed to the channel, which is really low. So subscribe, it's free and you can always unsubscribe later if you want. Now let's get into the video. So, buying a home. It's a great way to get onto the housing ladder and to start building equity in a home that you own. It's often cheaper than renting, and it's an asset that you can pass down to your children one day. Some people might see a home as a liability because it often has a big old mortgage attached to it and it doesn't generate your rental income. But after the 25 or 30 year period, you'll have paid down that mortgage and you'll own a home or an asset that's free of debt. You could always leverage that asset in the future and take out a loan against it to buy something else. So what advantages are there to buying a home right now in November 2020, still deep in the middle of the pandemic? Because there are some advantages, and let's talk about them. Well, firstly, you're going to get future benefits. The housing market might crash now in 2020, but I can pretty much guarantee that in 30 years' time, that property is going to be worth a whole lot more than it is right now. On top of that, you'll have also paid down that entire mortgage, so you'll own a home that's appreciated over time and it won't have any debt against it. For example, if you bought a home in London or New York or LA back in 2006 and 2007, you would have probably been a little bit gutted at the time because the market crashed in 2009, 2010. But obviously if you kept hold of this home by not being too over leveraged, you'd probably be laughing now, as that property is probably worth at least double what it was worth back then. It's also somewhere that you can call your own. Maybe you're currently living with family or renting. Obviously by buying a home you can escape that situation and have your own property. You can add an extension, build up, down, change the layout of the rooms, refurbish, literally anything, and it's going to be profiting you and not someone else. You'll be doing that renovation or that extension to help force up the equity that you own in your property, not helping build somebody else's equity. You're not just paying dead money for a refurbishment for a property that you don't even own. You could also say that now is a great time to buy a property because interest rates are the lowest they've ever been. Over the past 20 years, the Bank of England base rate and the US Fed rate have bounced around 3 to 6% before falling to around 0.5%, going up a little bit and then falling further to around 0.1%. There's also a chance that the housing market doesn't crash, in which case there's no time like the present to buy property. Time in the market is always more important than timing the market. So many people try and time the market and often end up waiting 5 or 10 years to buy a property. Even if they bought just before a crash, it's likely that in 5 or 10 years the property is going to be worth more than it was in the first place. For example, even if the housing market did crash by like 10 or 20% the day after you bought the property, it's likely that in 10 years you would have made all your money back anyway, as the housing market tends to appreciate at least 1 or 2% a year, and sometimes a whole lot more. As always guys, if you're enjoying the video so far, be sure to drop a like down below if you haven't already, as this really helps out my channel. Also, after this video, be sure to check out some of my other videos, like this one here, or maybe it's up here. But now might also not be the best time to buy a property. So let's talk about some of the disadvantages. Obviously right now we're currently in the middle of a worldwide pandemic. No one really knows how much longer it's going to last. Back in April and March time, no one had even considered a worldwide lockdown, and now the UK is currently on to lockdown number 2. This lockdown is supposed to last until December, but considering the UK government have just extended the furlough scheme until March, it could last a whole lot longer, or we could even be on our way to lockdown number 3. If these lockdowns continue to last, obviously the government can't continue making furlough pay forever, and therefore at some point the government support will end, but if the people are still in the lockdown, then obviously they won't be able to go to work. If people can't go to work, then obviously businesses are going to go under and people are going to lose their jobs. If people don't have any form of income, that probably means that they're not going to be able to make their mortgage payments. If millions and millions of people can't afford to make their mortgage payments and lose their homes, then all of these homes are going to flood onto the market all at once, which would likely cause a housing market crash. I've spoken in more depth about housing market crash in some of my other videos, and also by how much I think the market could crash, which is by around 10 to 40%, which would obviously have a massive impact on the housing market and house prices. If you buy a home for around £300,000 using a 10% deposit which is £30,000, and getting a £270,000 mortgage for the rest, and the market falls by around 20% of the property value, or £60,000, you're then left with a home that's only worth £240,000, but you have a £270,000 mortgage against it, and therefore that deposit that you put in is lost, and you're actually in a negative equity position of £30,000. Basically what this means is that even if you wanted to sell the property and pay off that mortgage, even after you sell the property and pay it down, you still have £30,000 left to pay. So you don't actually get any money back out, and you're still in debt by £30,000. And that's even on a slightly more optimistic end of the scale as well. If the market crashes by around 40%, that £300,000 home is only going to be worth £180,000, and you still have that £270,000 mortgage on that home. Now in that specific circumstance, you'd be in a very sticky situation. But it's only going to happen in that very specific circumstance where the lockdowns continue and the furlough pay ends. Obviously, if this doesn't happen, the market won't crash because there'll be no problem. Everyone will still be in jobs and still have a form of income to continue paying their mortgage. Another disadvantage of buying a home is that it's a very long-term thing. If you sign yourself up for a 25 or a 30-year mortgage, you have to pay it down over that 25 or 30 years. Obviously, you don't have to stay in the same specific home for 25 or 30 years. You could move houses after, say, 5 years and just port your mortgage over. But saying that, it's definitely much easier to just sign a 1-year or a 2-year rental agreement and move somewhere else at the end of the agreement. You don't have to worry about being in positive equity or negative equity, or upsizing or downsizing, or needing a bigger deposit or anything like that. You just finish the contract and move somewhere else, or you just extend your current contract. In terms of interest rates, yes, we're currently in a low interest rate environment and rates have never been lower, but rates could always be cut further. The government tends to cut rates to spur on economic growth, and this is probably going to be needed as a result of this pandemic to re-stimulate that growth. But you might say, well, Tom, what are you talking about? Interest rates are currently at or near 0.1%. They can't be cut much further, can they? Well, look at Switzerland. The base interest rate in Switzerland is currently at negative 0.75%. Now, this doesn't necessarily mean that banks in Switzerland are giving their residents money to take out a mortgage. They're not exactly giving them £100 a month to take out a mortgage, because mortgages are usually quoted a few points above that base rate of interest. For example, like 2% above base rate or 3% above base rate. So while our mortgage rates might be like 2 to 2.5%, theirs might be like 1.25 to 1.75%. Now, weirdly enough, there might actually become a time where the banks pay you to take out a mortgage, but the only way this would happen is if the Fed or the Bank of England cut interest rates to like negative 5%, which is obviously quite unlikely to happen. The banks will probably only cut interest rates from like 0.1% to like negative 0.1%, just a small drop. So while your mortgage might be quite cheap now, it could always get cheaper, especially as governments tend to cut interest rates after a recession to spur on that economic growth. Another reason why now might not be the best time to buy a house is because of the uncertainty. Maybe you're somebody that works in the construction industry. Because of this second lockdown, you can actually still work. But what about next month or a few months down the line? You might be on furlough. People just don't really know at the moment. Or maybe you work in sales or marketing and you can actually work from home at the moment. Great. But what if the company that you work for isn't making quite the same sales as it used to and ends up going under? Well, you won't have a job then, but you don't really know how it's going. Because of this current uncertainty, tying yourself into a 30-year mortgage where you have to pay hundreds if not thousands of pounds every single month might not be a great idea. Especially if you're somebody that works in the finance industry or owns their own business. The last thing you want is to default on your mortgage or be declared bankrupt, because obviously this could affect the chances of you getting a job in the future or being allowed to run a company for a number of years. Getting a mortgage puts a huge amount of pressure on you to earn money every single month. And right now, in the middle of a pandemic, that might not be what you want because of all the uncertainty. Therefore, it might just be better continue living with parents or to continue renting. If you enjoy these videos and want me to keep creating more, maybe consider becoming a member of the channel by clicking the join button down below. Also be sure to message me on Instagram for a link to sign up to Free Trade, where you can get a free share worth up to £200. I think it's also really important to consider the monetary risk versus reward. On one side you have the reward. You've got your own house, you're paying down your own mortgage, you're locking in that low interest rate, and so much more. For the reward, let's just assume that the pandemic completely goes away. Over the next year you might make a 1 or a 2% gain on your property. The year after that you might make a 2 or a 3% gain on your property. So let's assume over the next 2 years you make a 5% gain on that property. If you buy a £300,000 house, that's a £15,000 gain. Great. You also benefit from paying down the mortgage over 2 years as well. If you buy that £300,000 house with a 10% deposit, you've got a £270,000 mortgage. This means you're probably paying somewhere between £1,000 and £1,200 a month. And around half of that is going to be interest. So obviously the other half is going to be your capital paydown. 2 years of £500 or £600 a month of capital paydown is a capital paydown of somewhere between £12,000 and £14,000. Adding that onto your £15,000 gain from earlier, you've made nearly £30,000 over 2 years, all things considered. On the flip side, if the market crashes in value by 20%, 30% or even 40%, you're going to make a massive loss on the value of your home. If the market crashes by 20%, your home is going to be worth £60,000 less. If the market crashes by 40%, your home's going to be worth £120,000 less. But you do still have that £12,000 of capital pay down from earlier, providing that you keep your job and continue paying down your mortgage. So all things considered, you've made a £48,000 loss, all the way up to a £108,000 loss. So it now seems that the risks of buying a property massively exceed the rewards of buying a property, especially in these uncertain times where we don't really know what's going to happen. If we could be certain that there'd be no more lockdowns and no more pandemic, then we could obviously be more certain that there wouldn't be a housing market crash. But right now that just isn't the case. No one can see into the future, and therefore no one really knows how much longer this pandemic's going to last and what's going to happen as a result of it. As always guys, if you enjoyed this video, be sure to check out some of my others. Alternatively, subscribe to the channel and ding the notification bell, because that way you'll be alerted when I upload a new video. Cheers!